You're watching Masters in Trading Live with Jonathan Rose.
Just took a big sip of water. How's everybody doing? Welcome to Masters in Trading Live. Masters in Trading Live. My name is Jonathan Rose. I get on here every single day the market's open, 11 o'clock Eastern, to share my favorite thoughts. Today, I got 4 topics, and I love this topic. Now, I'm going to center myself. This topic may seem a little kind of esoteric. It may seem a little different. It's awesome, okay? It's called closed-end fund arbitrage. It is a phenomenal trade. Stay with me. 4 topics. First, I'm going to start with Carl Icahn, legendary investor. He got his start in closed-end funds. Next, we're going to talk about hedge fund secrets. 3, a trade to buy Cuba. Why is there a smiley face? Because it was nonsense. It wasn't buying Cuba. You'll love this one. And then finally, hang with me. I have a closed-end fund trade ideas for all of you that are watching. Let's get into it. This one's going to be fun. Go into the screens. Carl Icahn from the New York Times. He expanded into arbitrage and noticing a similar pricing inefficiency in closed-end fund mutual funds. That's what we're going to be talking about today. We're going to be talking about closed-end fund mutual funds, which were almost always trading at a discount to the value of the assets they own. Icahn started buying them up. Icahn's strategy to buying closed-end funds was to shake the tree and to force the management to liquidate the fund at a profit to the shareholders and, of course, to the man himself. I'm going to explain exactly what closed-end funds are. I love this trade. I want you excited about this trade. There are 3 kinds of mutual funds, okay? A mutual fund that you buy at Vanguard is going to be right here, okay? If you want to buy a mutual fund, just go and buy a mutual fund. It's very, 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 very easy. Okay, so we have the net asset value is the value of the holdings. So if I have a fund that just has Apple and Microsoft, the value of the fund is the value of the Microsoft and Apple that I hold. The daily NAV is reported. Open-end fund, a mutual fund. The daily NAV is reported. ETF, real-time net asset value. Now, the NAV and the market price. Okay, so let's say the net asset value of a fund is 20. It equals 20. The market price for a closed-end fund, it might be 17. For an open-end fund, if the NAV is 20, the market price is 20. For an ETF, if the market price is 20, the NAV is 20. Okay, it's the same thing. Market provides liquidity. Why does the market provide liquidity? Because it's not the net asset value. There's a secondary market for the stock. So the market provides liquidity. The fund provides liquidity. If you want to buy an open-end fund, call Vanguard. Buy an open-end fund. Easy peasy, lemon squeezy. ETF, the market provides the liquidity. ETF, you have to buy in the market, but the NAV and the market price are going to be the same. Here's why closed-end funds are a very, very good trade for you, me, your friends, your relatives, long-term investors. Because closed-end funds are about a $300 billion market cap, the entire thing. Open-end funds, ETFs. Now, what this means is if you have a big, big fund, Goldman Sachs can't really play in closed-end funds because they're too small. What are they going to do? 300 billion? That's not enough. They have trillions of dollars to work. So they're going to go into mutual funds and ETFs, leaving retail traders edge and closed-end funds. Let's keep going. Here's where I got obsessed with closed-end funds. Now, we have a program called Advanced Notice, where we have a tool that finds the most unusual trades in the market. I'm a big believer that the market is not fair, and I like to find inconsistencies so I and my clients can make a whole bunch of money. So look at what happened. US and Cuba reopened long-term embassies back in 2015. All investors rushed to invest in Cuba. The Cuba ticker symbol, CUBA, at the time was trading 7 and spiked to trade 15. Everybody wants to invest in Cuba. But the thing is, Cuba, there's no investment in Cuba. So the NAV and the market price, so the NAV at the time was trading 7. The market price was trading 15 because these don't have to be the same. The secondary market stock trades separate from the NAV. So what ends up happening is JR realized, hey, go to the SEC website. Let's look under the hood on this Cuba closed-end fund. And there's no Cuban investment. What the heck, guys? How can there be no Cuba investment in the Cuba fund? So this was just a whole bunch of nonsense. Fugazi, as they say. It shouldn't happen at all. Premium and discounts. This is the premium and discount of the Cuba fund. And you can see here, Cuba was trading at a 60% premium to the net asset value of the fund. This was driving me crazy at the time, and it happens to be one of the biggest trades in my career. The owner of the Cuba fund is a fellow by the name of Thomas Hertzfeld. Thomas Hertzfeld, right before they didn't announce that Cuba was going to increase relations with the U.S., this guy who owns the Cuba fund jumps in and buys $2 million worth of stock because he knows everyone's going to try to invest in Cuba, but he also knows, gotcha, there's no investment in Cuba in my Cuba fund, so I'm going to sell out just 4 days later, and I'm going to make $1.8 million. At the time, I was an analyst for a family office. Hank Greenberg, a very well-known analyst. Guys, my name is Jonathan Rose. I work for a small family office. Cuba, on the other hand, has no leverage, no distribution, and trades 100% exchange-traded equities. It seems grossly unethical for the management to allow this name to trade at such a premium. Also, the name Cuba implies they invest in Cuba, but they have no investment. Herb Greenberg gets back to me. He likes the story. We're definitely going on the right way, but he was involved in other projects. But nevertheless, this name ends up coming off absolutely huge. Cuba trade $15.97. It took about a year to get it all the way down to $4, but it just shows there's just so much nonsense that goes on in the market. That's why you have to learn. So we move on. March 18th. You can go on YouTube and find this Masters in Trading Live. I shared a closed-end fund in ASA, A-S-A. The reason that I shared the closed-end fund in ASA is because we were seeing this at an 18% discount. ASA was trading at an 18% discount and normally trades around a 10% discount. So that's why we shared the trade going back on March 18th. ASA only has a 1% management fee, real plain vanilla stocks. That's why we shared the trade. And it didn't take very long for ASA to rally. And this was today or yesterday. You can see we got in at an 18% discount. Well, now it's a 10% discount. So not only do you get the upward growth in the stock, which was awesome, you also get that 18% discount goes to a 10% discount. So you capture an additional 8% just in the closed-end fund. It's a really, really cool trade. And once you learn about these, you'll see there's lots of edge. Let's go through two examples. And I'm going to go through two examples. And on the second one, I'm going to give you a trade idea. I'm going to show you what we don't want to look for. And then I'm going to show you what we do want to look for. Here is what we don't want to look for. This is a bad example of a closed-end fund. Closed-end fund, symbol NTG. Currently, it's trading at a 14% discount. The net asset value is 50. The share price is trading at 43. Why isn't this one good? You can see the price and the NAV. It's got a 7% div. Fine. Look at this. The reason why this is not good is because some closed-end funds do this. And this is a bad word. This is naughty. What does this mean? ROC. ROC means we're just giving your money back. Return of capital. They claim they have a 7% div, but it's bullshit. All they're doing is returning capital. That's an example of a bad closed-end fund. Here's an example of a good closed-end fund. This is an example of a good closed-end fund. I'd like to put this in our portfolio. This is an investment. It's a long-term investment. Right now, ERC is trading at a 9% discount. It lives at a 6.5% discount. It's traded up to a -2 discount. It's a really good time to buy. The distribution rate, 8.72%. ERC is not like the NRG like we first shared because they're not returning your capital. They're playing the game fair. They are only returning income. By returning income, it's got a steady stream of income, it's consistent, and it doesn't return any capital. If I go to the next screen, you'll see it's also had a bigger discount over the years. And right now, we're getting the biggest discount that we've seen over the last 2 years. Another reason that I really like this is look at the distribution history. And the distribution history is going up, 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 up. The worst thing a closed-end fund can do is reduce their dividend. The street gets very bearish on closed-end funds that reduce their dividend, but this is not the case with ERC. So the trade idea would be setting a limit order to buy ERC, last trade, $9.05. Good long-term investment, $9.04 bid to get long. I hope you like this as a little overview for closed-end funds. It's a really, really great trade. Check out that ERC, and if you have time, go back to the YouTube channel and watch that March 20th so you can see that ASA trade. For everybody in all access, NASDAQ won't stop rallying. NASDAQ to infinity and beyond. But we're reaching a critical juncture in the QQQs. So I have a little hedge that I want to put on if the Qs get to a certain price. That's what we're going to go over with all access. For everybody else, thanks for watching. We'll see you live tomorrow, 11 o'clock Eastern Time.